Hey everyone, we are going to analyze two different IPOs that are running this week. We'll be using my IPO evaluation framework from our last video to analyze them. Should you subscribe, is that one question we'll try to answer. So let's get started. Before we go any further, the IPO evaluation that we had done last week, we had clearly realized that GPT Healthcare did not have strong legs to stand yet. I had called out that you can think of it from a listing gain perspective, but that's about it. And here we are, GPT Healthcare is at 167, it listed at 220, so hopefully you got some good action there. And now it's lower than its IPO asking price of 180. So hopefully you made a right call and you can now think of entering it as you think fair. With that, my name is Ashish Thomas. I'm a graduate and a management consultant. My daily job is to evaluate firm, understand risk, and anticipate market moves. And I thought, why not apply all of that to the stock market? So here we are, and let's jump right in. We begin with a quick introduction of the IPO evaluation framework, then dive into the IPO offerings for this week, and finally end with subscribe kare ki nahi. With that introduction, let me take you through the methodology of evaluating IPOs. There are many ways to do it. This is my framework that I use as I think about subscribing to IPO. We'll begin with understanding the purpose of the IPO, check on the market sentiments, look at the industry performance, where company ke financials dekhenge, and finally end with valuations. If you're not familiar with it, I put in a card here that will take you to a more descriptive version of the framework. Also added in the links in the description. We're going to use the 10-point framework, scoring each parameter from 1 to 3, with 3 being the highest. With that, let's get right in. The first IPO that we're looking for is GJ Chemicals. So GJ Chemicals ने 250 crores का IPO निकाला है. आज March 7th को इसका final date है. Price band set हुआ है between 210 to 221 के बीच and 67 के launch में खरीदना पड़ेगा. On March 13th ये stock market में list होगा. Is the money being raised for the IPO? That's the first question. Yes, 67% of the IPO is fresh. Its majority of the proceeds will go to the material subsidiary BBJ Oxide, where it will fund the long-term working capital mainly. 6 crores will be used for setting up an R&D center. However, because the remaining 33% is not being used for growth, I'll give it 2 for now. Next is IPO substantially oversubscribed. Yes, after a day, IPO is fully booked. Retail portion is at 3.62 times. Non-institutional portion is 2.9 times. So very likely there will be a listing gain play here. So giving it a 1. What about the grey market? The current premium is around 60 rupees. So 27% listing gains are visible. I'll give a 3 for it if you're thinking from a listing gains perspective. Yeah, there is support in the industry to go. Yes, absolutely. Zinc oxide market is fragmented, so it allows large players like GJ Chemicals to grow. There's a very high barrier to entry with approvals, expertise, relationships, which actually make it really hard for the new players to thrive. This is a high local and global. There's demand for zinc oxide, so as it is being used for various industrial products. And finally, there's government who is supporting for the local production of zinc oxide to reduce our high dependence on imports of the product. So definitely a 3 for me. Does it have a strong business proposition? Yes. It is the largest manufacturer of zinc oxide in India and is in the top 10 globally. Yet 9 out of top 10 global tire manufacturers, all top 11 manufacturers को supply करते हैं. With the new industrial usage production in ceramics and electronics, they have a strong business proposition. So definitely a 3. Are there solid prospects? Yes. One is that they have long-term key association with key customers. They are already present in South India, East India, now following into the large chemical zone in West India. And finally, R&D का focus है to enter new high-margin business. So revenue diversification करते रहते हैं. Definitely a 3 for me from this perspective. कोई major risk है? हाँ, ये 76% of the company revenue is only coming from top 10 customers, and actually 90% of the revenue is coming from rubber and tire industry. तो कुछ भी company effect या industry effect होगा तो ये काफी बड़ा shock रहेगा इनके लिए. दूसरा है रॉ मटेरियल्स के लिए फॉरेन सप्लायर्स के रिक्वायरमेंट्स हैं और उनके ये सप्लायर्स के साथ ये लॉन्ग टर्म कॉन्ट्रैक्ट्स नहीं साइन किए हुए हैं, तो वहां पे भी एक सप्लाई चेन रिस्क हो सकता है. एंड बाकी जो बिजनेस रिस्क हैं, रेगुलेशंस, कंपटीशन, अवेलेबिलिटी ऑफ टैलेंट, ऑल इज देयर. सो डेफिनेटली अ मीडियम टू हाई रिस्क फॉर मी. सो दिस इज अ 3. Are the financials strong? It is shaky being in the commodity space. The fall in zinc related price crashed the FY24 numbers and is unlikely to touch FY23 levels at the moment. The EBITDA margin is only 5%. That is a risky proposition in a very volatile world. The DE ratio is healthy with over 30% return equity. So very high from a market numbers in terms of return of equity and ratios, but financials are shaky. Is it better performing than it appears? So I've got an expert of some of the competitive firms in the market. Its EPS, ROE is all on or under par of the industry. So an average score of 2 for now. In terms of the valuation, it is actually right price from the industry based on its multiples. Given the very commoditized nature of the product, actually, the valuation is really not attractive. So definitely a 2 from my side because of this. With this, the IPO evaluation framework score is coming out to be around 22. While there are a couple of things that are standing out, a majority of it is either average or poor based on the framework. Anything less than 5, and the stock actually has less than 5 parameters going in its direction. So a score of 22 would mean that it is better to wait for the stock to list and take positions as there is more information around it in the market as it gets launched. So final thoughts. While it is a market leader, the business has high working capital with very thin gross margins. It's highly dependent on customer segments and industry. Both financial and valuations are average. So you need to think about it for a re-rating to happen to enter into the stock from an investing perspective. But for listing gains, absolutely, because of the high grey market premium, you can actually think about getting in and actually, selling the stock right on the first day. Alright, the next one is Gopal Snacks. Do like the video if you haven't already. Click on the subscribe button if you're finding any value in the content. It will keep motivating you to make more such videos on IPOs in the future. So let's understand the story. Bipin Hadwani जो थे, उन्होंने 1400 crore का business बनाया था on traditional Gujarati savories in Gopal Snacks. He is also called the Gathia King in Gujarat. But 2 साल पहले उनका relationship sour हो गया था with his elder and shareholder brother Praful Chandra Hadwani, who then exited the company and created his own firm called Gopal Snacks. अब विपिन ने एक 540 crores का raise किया था debt so that they can acquire Praful Chandra's 26% of the stake in Gopal Snacks. And now to repay that, this 25-year-old company is launching the IPO. So the IPO is OFS, offer for sale, issue size is 650 crores, IPO is priced between 281 and 400, and IPO is going to close on March 11th. With that, is the money being raised by the IPO used for business growth? No. All the money is actually going to pay off the promoter debt, so nothing is going to the company. So definitely a 1 for me. Is the IPO substantially oversubscribed? No, after the one day, the subscription stands at 0.56%. The retail portion is already at 0.89. So it's likely to head towards the subscription zone, high subscription zone, so giving it a 1. What about the grey market? The current market premium is 65, which shows 16% gain in the market. This means IPO will be again interesting from the listing gains perspective. Yeah, there's a support for the industry to grow. Yes, absolutely. If you think about the Indian market, the savory market, Western savory snacks is around 51% of the market, ethnic is around 49%. The entire market is now growing at 11% CAGR. So there's definitely a good strong growth. The organized market is around 57% in the industry today. That segment is also growing at 12% CAGR. And because of the increased sales to supermarket and hypermarket, there's more organization that is happening in this sector. Ethnic namkeen and the snacks where Gopal actually operates in, it's actually very lucrative because of the very high growth rate as well as very high margins in this segment. So overall, the industry is really conducive for growth. From a business proposition, the business proposition is actually undifferentiated as established players already have a similar successful product in the space. However, given the consumption rate of India, there's still space for Gopal to grow and continue to thrive in this sector. The vertical integration and the logistic ownerships keeps the cost efficient. It's a 2 for me because of the undifferentiation in the product mix. Are there solid prospects? वो further enhance कर रहे हैं उनका presence in core of Gujarat. They are further accelerating in focus markets like Maharashtra, Rajasthan, Madhya Pradesh and Uttar Pradesh. They also have local factories. But as you see on the screen, they're already large brands which are already present and established. So it's going to be a push and pull effect which will, in case Gopal really wants to succeed in the market. कोई major risk है? There's a huge reliance on its core market like Gathia, which is a big risk. The entire market is in Gujarat, the majority of it. So these are really big red flags for me. Even in Gujarat, it's the second largest, so it's not even a market leader there. Other business as usual like consumer taste, contamination risk, regulatory risk, competition, availability of talent is anyways there with the company. So I'm going to again peg this at a really high risk company for me at 3. From a financial perspective, if you think about it, the EBITDA margin is doing really good. It's at 13% right now. The firm, in fact, because of the split in the business and the family issues which were happening, there's been a muted growth because there was no focus on the business. However, post the IPO, I think again as they get refocused, as they have their new strategy built in, there might be an improvement in the performance. I'll give it a 2. It's just like a wait and watch to see how they start performing after the IPO. Is it performing better than its peers? So I've got some excerpts for the popular firms in the market. They are actually on par with the industry if you look at it. However, the bigger problem is their working capital days is very high, which means it takes Gopal Snacks 40 days to convert its operational cash into revenue. This shows relative inefficiency in its process when compared to the industry. And finally, in terms of the valuation, it's actually right price with industry-based multipliers. So it's actually a 2 for me from that perspective. With that, this is the IPO evaluation framework score. It's at 19. Again, there are only 1 or 2 things that stand out for this company, but anything less than 24, it actually means that the stock does not have a lot of things going in its direction. Gopal's score of 19 means it would be better to wait for the stock to list and take more position when and when the information is available in the market. So final thoughts. The purpose of the IPO is actually to only repay debts from the promoters. It operates in a very competitive industry and they don't really have a very good differentiated business proposition. It has medium financials and there are better peer options when you look at from the multiples and the numbers in the market. There are better peer options for investment. Now, given the grey market price, short-term investors can get in to book some listing gains in the market. That's my thought for this IPO and both the IPOs. अगर आप लोगों को कुछ भी अच्छा लग रहा हो इस वीडियो में तो जरूर लिखना what is the next IPO or what other IPOs that I can look into. Do not forget to click the bell icon to get all the notifications. With that, that's all from me today. I hope this has given you a great starting point as you think about JG Chemicals and Gopal Snacks, as you think about investing into it today. Do like the video. Please drop in a comment if you like something or anything that I should change. आपके comments काफी valuable रहेंगे as I continue to build this channel. Do subscribe to the channel if you haven't already, and please share this with all the like-minded investors. Do note that I'm not SEBI registered, so these are my own independent views and analysis. Please do your own research too, and let me know what you think about these IPOs. Thank you.